complete smart contracts, and that Sovryn has, through its community now built out since launching in April, the ability to trade, to do margin trading, to do borrowing, to do lending, is introducing perpetual swaps, has a governance system for the ecosystem built out, has bridges to other chains, and most importantly, a trust minimized peg to Bitcoin, and that transactions that occur on Sovryn are secured by Bitcoin miners and also expand and increase the security budget of those Bitcoin miners because they create an entirely new set of transaction fees that go to Bitcoin miners. But now, over the next few weeks, two teams that have been working together, one team called the Mynt team, which has been working on the Mynt protocol, and one team called the Zero team, which has been working on the Zero protocol, both of which are sub-protocols of Sovryn, are going to introduce Bitcoin-backed stablecoins and a remarkable new type of product, the ability to take out loans against your Bitcoin at zero interest. So I think maybe a good place to start is why I think this is so exciting. For a long time, I thought that if we could get truly decentralized stablecoins, then basically it's game over. One of the, Satoshi created Bitcoin with a goal of creating a peer-to-peer currency. And a currency has several components. It has the store of value component so that you can make sure that you are not going to be inflated away. And that becomes more and more important with every passing day. But it also has the medium of exchange component, the ability to use a currency to make payments for everyday things. And the medium of exchange leads to the unit of account component. In other words, that people start pricing things in the currency. And Bitcoin exists in a world in which there are already fiat currencies that people use as their unit of account and their primary medium of exchange every single day. And so the experience has been that you kind of need to get into Bitcoin. And in fact, even more than that, people often price their Bitcoin holdings in dollars or their local currency. And so this has always been a point of centralization for Bitcoin. And it's always been something which has held Bitcoin back from the full potential of adoption for people to be able to save their money in a non-volatile way, to spend their money in a non-volatile way, and to price things in a non-volatile way in comparison to everything else that they're doing in their lives. So stablecoins have become very, very popular for exactly this reason, because they provide you with a lot of the benefits of crypto. They can also interact with Bitcoin and other crypto assets, but they have stability. They have a peg tied to the currencies that people are familiar with, most obviously the dollar. But none of the stablecoins that we have today are reliable and decentralized. There are pretty decentralized stablecoins, which are sort of like the algorithmic stablecoins, but they are very risky. They're a game which, they're basically a new kind of fiat, right? Which they have these central banks, which are smart contracts, which issue tokens and destroy tokens on an arbitrary basis in order to try and keep a peg. And then you have centralized stablecoins like Tether and USDC, and really like DAI, which provide you with a higher degree of security sort of on a day-to-day basis, but they have very big risks, both regulatory risks and operator risks. And they obviously have those risks because they're centralized. So what if we had a truly decentralized stablecoin, and more than that, one which was backed by the most reliable asset in the space, by Bitcoin? So I think that's always been the dream. And I think of it as game over, because once you have that, people around the world can start to use that asset instead of other things, always are able to convert in and out of Bitcoin. And so now suddenly Bitcoin becomes useful in El Salvador, in exchanges, but also anywhere for saving, for payments, for unit of account. And it basically takes our digital gold, our Bitcoin, and introduces to the world of digital gold what currencies have always done. Instead of people transacting in the store of value in gold, right, which you keep in a vault, you transact in a token, a piece of paper or a coin, which represents your claim on that gold. And that's exactly what a Bitcoin-backed stablecoin does for our digital gold. So what's cool about this is we already have Bitcoin-backed stablecoin. It's called Dollar on Chain, and it's very cool. But it is limited because it requires a high degree of collateralization, and it requires that you basically sell to the money on chain protocol your Bitcoin, and then the money on chain protocol becomes the owner of the Bitcoin, and it issues against that dollars. What we really want is we want to have many different ways that we could choose to get this Bitcoin-backed stablecoin, and many different ways to create stability so that under any circumstance we can have a capital efficient way of creating Bitcoin-backed stablecoins. And in fact, not just of the dollar, but of any peg that we want, including a non-fiat peg. And that's what Mynt does. Mynt is a system for aggregating these different methods. So dollar on chain, zero, and other methods that are being built out in the Sovryn ecosystem can be aggregated into one super stable Bitcoin-backed stablecoin. And that's why it's called the Mynt. It's the Sovryn Mynt. It's, probably the most direct competitor to the Federal Reserve because it issues dollars. It does so independently. It does so without recourse to dollars that the Federal Reserve has created. And so that means that each and every one of us can now participate in the act, not just of using dollars, but of minting dollars. And what Mynt does is it opens the door for us to have many different ways of creating these dollars. And one exciting way that is coming out is Zero. And what Zero does is Zero provides a way for you to borrow against your Bitcoin from yourself. And because you're borrowing from yourself, you're paying zero interest rate forever. And what that means is that nobody, not miners, not savers, not speculators, nobody needs to sell their Bitcoin ever again. Because if you want liquidity, you can now get dollars on the basis of your Bitcoin. And you can keep that line of credit that is created for you forever, Laura. And as Bitcoin keeps going up forever, your line of credit keeps growing and growing and growing. And so you can continue to borrow from yourself as the value of your Bitcoin accrues more value forever. And this is something that potentially you can do, and then your children can do, and your grandchildren can do. And they can be like this nest egg of Bitcoin that the generations can live off of. So how does that work? How can a zero interest loan exist? Right? Who are you borrowing from? Well, because Mynt is its own bank, Mynt issues exactly like a bank does. Every time a bank gives out a loan, it's not taking money from someone else. It's creating new money. Well, Mynt, when it creates this loan for you by interacting with the Zero protocol, it creates new Bitcoin-backed stablecoins. It creates new dollars, and it gives them to you on the basis of your own holdings. And so, like rich people today, Elon Musk doesn't sell his Tesla stock when he needs to buy something. What he does is he borrows against his Tesla stock, and that Tesla stock continues to go up. And so, just from the accrual of value in the Tesla stock, if he needs to, he can pay back the loan. And so this opens that, it democratizes that for everyone to be able to do with their Bitcoin. But it's even better than that because Elon Musk has to pay interest rate, and that's why he has to sell some of his stock periodically in order to pay down those loans. But with a 0% interest rate, that loan can basically be held forever. And so I think this is an extremely exciting thing, both because we're getting a truly decentralized, reliable stablecoin backed by Bitcoin, the world's first truly decentralized stablecoin, and one which will remain decentralized into the future, because I think DAI for a while was decentralized, but that has been reduced. And then in addition to that, we're getting a way for Bitcoiners to be able to unlock the value of their Bitcoin for their everyday expenses, for everything from doing groceries to buying a house, and never have to sell Bitcoin again. So I'm extremely excited about what's happening, and I think this is like, it was this kind of thing that got me excited. The potential that these kind of things could be created was what got me excited about Sovryn. And it's the kind of thing that I want to use. And let's open it up to discussion and questions.
All right, so I'm going to follow based on the who requested first. So first we're going to have Jack. I'm going to put you up to speak right now. Go ahead, buddy. Yep.
Loud and clear, Jack.
Question, the loan value ratio of the zero worked out yet?
We couldn't hear all of the question. If you could repeat that, please.
I think I got the question. He's asking about the loan to value ratio, or what can also be called the required collateral ratio, right? Mm-hmm. So when you take out a loan, you need to make sure, right? The way a Bitcoin-backed stablecoin works is it needs to know that it's always backed by at least $1 worth of Bitcoin. Jack, if you could mute yourself, please. But Bitcoin is volatile in comparison to the dollar, and so its price could go up, its price could go down, and so you need it to be a little bit over-collateralized. And the question of how over-collateralized you need it to be is based on how efficient and effective the mechanism of allowing people to redeem their Bitcoin for $1 at any time is. Zero is a very, very efficient system. And so what it does is it allows for a collateralization ratio, or an LTV, a loan-to-value ratio, of 110%. In other words, to create $100 worth of Bitcoin, the lowest amount of Bitcoin you would need is $110 worth of Bitcoin. Now, having $110 worth of Bitcoin in the Zero protocol, in other words, having the lowest possible collateralization ratio, is also the riskiest possible collateralization ratio, because if Bitcoin suddenly dips against the dollar and your collateralization ratio drops below 110%, then your position can get liquidated. What does that mean? You could end up with $105 worth of stable coins, and the person who redeemed against you could end up with $105 worth of Bitcoin, right? So you would end up with a stable coin, so you wouldn't lose money, but you would be taken out of your Bitcoin position. And then one question that people could ask is, what happens to the other $5? Well, that's the profit for the Zero protocol, right? So the Zero protocol makes profit in two ways. One, from an origination fee. So on average, creating a loan like this, even though you pay zero interest, you pay a 0.5% origination fee. And then the second thing is, when there are these sort of redemption liquidations, 5% goes to the protocol and to the liquidators. Now, what's advisable, therefore, is that you if you're going to hold a low collateralization ratio, you should babysit your loan a little bit and make sure that you don't fall under. You also need to take into account something else, which is that the system as a whole always makes sure that it's going to have more than enough Bitcoin to pay everyone back. And so it requires that the system as a whole has 150%, or $150 worth of Bitcoin for $100 in circulating supply and of stablecoin. And so if the system as a whole drops below that, then again, you can start redeeming against the lowest collateralized positions. So if you want to take a very, very long-term position and you don't want to have to think about it or look at it at all, you want to do a 300% ratio. If you're going to take a shorter-term position, right, a shorter-term loan, you can have a lower collateralization ratio. And if you're going to look at, babysit your loan very carefully and make sure you're always ready to add more funds or to reduce the size of the loan, then you can take as low as 110%. And that provides the user with a great deal of flexibility. And right now, I think the UI that's going to be launching is going to be quite janky, but the team is working on a UI that's going to make this very, very easy and intuitive for people to understand, to have like super safe loan, super risky loan, and something in the middle. Jack, did that answer your question?
Yeah, that's very interesting. Yeah, groundbreaking stuff. Thanks.
All right, Mishmash, you go next. Just unmute yourself.
Thank you. Can you hear me okay?
Yes.
Absolutely.
Thank you very much for your time, Yago. I'm not an expert in this field, so forgive me for the simple questions, but is it correct that the security of funds when operating within the Sovryn ecosystem is dependent on the robustness of RSK?
The security of the funds.
What sort of anything that you do within the system, whether it's holding RBTC or Sovryn, and sort of generally having some of one's wealth locked up in various parts of the Sovryn DeFi ecosystem. Is the security of your funds, dependent on the security of RSK? Is that fair? And as a first question.
Yes, first of all, it's definitely fair, and it's definitely something everyone should be aware of, right? When you're using rootstock, when you're using Sovryn, you're taking on a number of new types of risks, right? Now, I think these risks are definitely manageable, and the system has proven to be secure in its operation up until now, but it's very important that anyone who's doing anything with their Bitcoin understand the risks that they're taking, right? So when you're using the Zero protocol, for example, here are some of the risks that you are taking on. One is the Bitcoin that is held as pegged Bitcoin, right? So all the Bitcoin that moves from main chain into rootstock, into Sovryn, is pegged Bitcoin. And if something goes wrong with the peg, you could be locked out from your funds for a while, or you could potentially lose access to that Bitcoin forever. Now, the system has been designed to be extremely robust and to make sure that never happens. But there are no guarantees that robustness is 100%. So, for example, yeah.
I'm sure it's like a reasonably complicated topic, and therefore sort of can't be treated in completeness here. But are there any documents or sources that you think are particularly good for people who want to read more about the sort of current arguments or critiques of the security, and maybe any recommendations for keeping up to date with sort of how that evolves if it does change over time?
Yeah, so I would recommend. If you follow the Sovryn blog or Sovryn Twitter, you'll see updates as that changes or improves in the future. But if you just Google rootstock pegnatories, you'll find documentation which will be able to cover that for you. But just so just on a very, very high level, what the rootstock peg does is it has a multi-sig system which has multiple pegnatories. And what is a pegnatory? It's some party that are signers to the multi-sig, but are also running software which independently from them, because it's using a hardware secured module, also signs the transactions. And then both they and the hardware secure module are receiving cryptographic proofs in the form of SPV proofs about the activity, in other words, the ability to transfer funds in and out of the peg. And so for something to go wrong, you'd need a majority of both the hardware secure modules and a majority of the PEG network. Multi-sig system, which would receive the funds after a year of inactivity. So again, there's definitely a risk there. I would say it's probably the most secure multi-sig system anywhere in existence, but that's one risk that you're taking. The second risk that you're taking is that rootstock could potentially be 51% attacked, which could revert transactions, right? Or slow down the chain. A third thing is that Zero itself is a smart contract system, and there may be a vulnerability in the Zero protocol. So I think those are the risks that you are taking when you're using these systems. And then there's a final risk, which is that you don't understand what you're doing. You somehow, lose your keys or something like that. All of these risks, I think, are substantially lower than the risk that you would experience if you were using a centralized service of any kind. Not just because it's not centralized, but also I think the technology is open, is more auditable, and is more secure. But it's also true that anything that you're doing like this is more insecure or more risky than just holding funds in a cold wallet.
Thank you. That's very helpful. And perhaps it falls into one of those aforementioned categories. But if you're successful with the use of this sort of stable coin and various other elements of your DeFi ecosystem, what is the robustness of the Sovryn ecosystem to sort of a state level interference or pressure to close down?
Yeah, so I think Sovryn is actually quite robust to a state level attack. There's 13,000 people, or at least 13,000 addresses that are participating in staking. Any changes to the protocol require a vote and some degree of majority. Protocol changes that can actually shut down the system or change access to user funds would require an 80% majority. And so, if the SEC were to come to me or to you and say, look, what Sovryn is doing should be regulated activity and we want you to start being regulated, then we would have to invite them to write a SIP, a Sovryn improvement proposal, and try to get it voted on by the community because there's no other way to make that change.
Thanks. That's really helpful.
All right. Well, we hope that covers it, Mishmash.
Thank you so much.
You're welcome. Our next speaker is Destinesia.
Hello, everyone. Can you hear me?
Welcome.
Welcome, Eden. First, Eden, you and a big congrats to you and the team for all the exciting developments and amazing what you're all doing. Really cool to see. I have two questions. One is on the duration of the loan. So am I correct in understanding there's no duration to the loans? There's no obligation to pay off a loan, say after 3 years, 10 years. It has an eternal maturity. Is that correct, or how does it work?
That's correct. That's correct. You could, because you're not paying interest, right? So if you were paying interest over time, it would be like your collateral was held in a leaky bucket and you would be sort of leaking Bitcoin slowly over time. But because there's zero interest on the loan, you can hold that loan forever.
Okay, that's clear. And pragmatically, because I'm based in the Eurozone here in the Netherlands, so how would I then spend that loan into the real economy here? Supposed to fund part of a house, for instance, or buy a car, or take on or pay the education for my children. How would that work?
Well, that will change over time. In the first instance, the stablecoin will be added to Babelfish. So Babelfish Protocol have said that they're going to add this as one of the stablecoins in their aggregated basket, which means that you will at any time be able to convert these stablecoins to USDC, to DAI, to Tether, to Binance stablecoins, and then you can withdraw them in the way that you would be able to withdraw any of those stablecoins. What we would like to see grow around this, and there's going to be efforts to introduce, is the ability for companies to start plugging this into retail payments, to ATMs, to debit cards, so that you'd be able to actually just go, with your Apple Pay and pay directly, at the cashier at the store, basically using your line of credit. Ultimately, where I think we would like to be is in a world where you have Bitcoin, you hold your Bitcoin in the system, and it stays liquid Bitcoin until such time as you want to make some kind of purchase. And at that point, you'd basically take a little bit more out of your line of credit, right? So you get on the store and you buy $100 worth of groceries. You would decrease your line of credit by $100, and you just swipe through your card, which would be attached to the system that does that automatically. So that might take a few years, but I think that's ultimately where we're going.
Wow, that makes sense. Thanks a lot, and cannot wait actually for that to materialize. Maybe one follow-up question. I assume that the collateral, the BTC collateral, you will then put on the Rootstock blockchain, and once it serves as collateral, it's in a way tied up, so you cannot use it for other things, right? I mean, that is how I should look at it. That's
correct.
Is that correct?
Right. So it's okay. Like when your line of credit is backed by the Bitcoin, right? So when you're using your Bitcoin for the line of credit, then obviously you can't use it for anything else. Otherwise, we'd be double counting. Right? And we're not a centralized service, so we don't do that.
No, exactly. No, clear. I get it. So if you want to then say make your Bitcoin free again, then you need to pay off your loan. And that is ultimately the trade-off, I think. So you build up that line of credit versus your locked up Bitcoin, which you can then spend into the real economy. But suppose you want to use Bitcoin for something for different purpose, then you pay off the loan.
Well, there are two options, right? So one is that you would just come and put more dollars. You want to buy a house. You buy a house. You take out a mortgage after you've bought out the house on the basis of the house, right? And then you immediately pay back the loan. Your Bitcoin's free again, right? So that could be like one way that you would do it. The other way is that you hold the position, right? And Bitcoin goes from $50,000 to $100,000, and then it goes to $500,000, and then it goes to $1 million, right? At which point, you say, all right, well, my original loan, I had $50,000 of collateral. I now have $1 million of collateral. So what I'm going to do is I'm going to basically convert that $50,000 and give up that, basically sell off that $50,000 to pay off my loan. So you could imagine that you create a loan today and you hold that loan for, I don't know, let's call it 5 years. And then 5 years from now, Bitcoin's at $1 million. So for 5% of the Bitcoin that you put in, you've now paid off your loan, and the rest of your Bitcoin is free and clear.
Clear, Eden. Thanks a lot, and thanks very much for answering the questions. Wish you and the team all the luck, and keep on pushing. Thanks a lot.
Thank you.
Guys, just a reminder, if you still don't follow us on YouTube, Telegram, Facebook, or here on Twitter, make sure to do that. Okay, subscribe on YouTube. Be the first to be updated on all the news from Sovryn. We will update regarding the start date for the Zero presale very soon. So make sure that you're subscribed to all of our updates, and you'll get to know first. Now, next we have Techie World. Go ahead.
Hey, can you hear me?
Yes, we can. How you doing, Teki?
I have two questions. One question is regarding tokenomics, and another question is regarding partnerships. Let's go with second question. Do you have any partnerships with other protocols to integrate Zero? Because at max Zero will be an RSK chain, right?
Yes. So there aren't any partnerships announced, and Sovryn, as you know, doesn't announce partnerships because Sovryn is a protocol and it doesn't really enter into partnerships in that way. What does happen is that other projects sort of announce partnerships or plans to use Sovryn, and we've seen this happen several times in the past. So, for example, Transact, when they introduced the fiat on-ramp, there are conversations that I've been told about, which are happening to introduce retail payments using these stable coins that are minted by Mint. And there are also companies or projects that are talking about providing liquidity and providing on-ramps and off-ramps. So I expect that we'll hear, so those sort of partnerships being announced over, the coming months.
And regarding tokenomics, when I was reading the SIP, I saw for Mint there was no vesting, and for Zero there was 1 month lockup. So how do you think there would not be a dump? Did you get my question?
No, I'm sorry, I didn't.
So in SIP, it was mentioned that bootstrap event sale, bought basically pre-sale, there was no vesting, right?
Yeah.
Everything is free for Mint, and for Zero, it was 1 month lockup or up to 1 month lockup. I didn't understand. Is it 1 month or up to 1 month? Like, what is the meaning of up to 1 month?
I think the idea was that it may take a month, or I think the original thing was 6 weeks before the system launches and you're able to start trading and using the Zero tokens. So that was added to the SIP to let people know that might be the case. It might be shorter.
Okay. Okay, I get it, that point. Due to some, let's say, technical work, it might take up to 1 month. Let's put it simple. So there is a possibility of dump, right? Because it's fully unlocked.
Yes, I think that chances of like a dump in the way that you're describing it don't really exist in quite the same way with sub-protocols, because these are SOV bonded tokens, which means that they're basically backed by SOV. In a way, they're kind of like fractionally wrapped SOV. And so you can always convert them into SOV. And that when the protocol launches, the value of the SOV will still be there, and there's a small fee for converting it back to SOV. So you'd actually lose money sort of unnecessarily, like that. If you've got hold of Mint tokens or Zero tokens, there's not a lot of benefit to trying to immediately convert it back to SOV. So I think that would be unlikely. But it's possible. People, the system is designed to allow people to do with their tokens as they choose.
That's because by default SOV has fallen down from 20 to 19. Mostly the sale happened was around 20 to 25. You can guess average, right?
Yeah.
Between 20 to 25. Again, if people it might take a snowball effect, and people might sell because SOV sold. Cascading effect might happen. That was one thing I'm thinking about it.
Right. Well, it could happen. I'm not overly concerned about that. In fact, it would almost be, the users have really very little to gain from that. But it could happen.
Yeah. Thank you.
All right, Sid. go ahead.
Yep. Thanks, Yago, for your time. So my question is, what happens to the existing lending pools for USDT, and I think there's a lending pool for XUSD as well, right? Both of those require interest, etc. What happens to those lending pools?
So those lending pools will continue to exist, and I think will continue to be useful. And the reason they'll continue to be useful is because they also allow you to borrow against other types of collateral. So, for example, Ethereum can be handed as collateral. Stablecoins exist as collateral in that system. And so people can choose to borrow against other assets. It's also the case that there's different mechanism there, right? So it's true that you pay interest, but you can't be sort of redeemed against unless you fall below the 150% collateralization, which is not the case with Zero. And Zero, in the unlikely event, and this I think is an extremely unlikely event, but in the unlikely event that the entire system is under collateralized, even if your particular line of credit is collateralized above 150%, you could still have that redeemed into the stablecoin. So while it's an unlikely event, it's a possible event, and so that's a slightly different situation. So I think what will happen in all likelihood is that some people will continue to use that lending facility because they're familiar with it. Even for Bitcoin, they'll certainly continue to use it for other collateral, and probably over time, or maybe even immediately, it might happen quickly, but we'll probably see that Bitcoin lending is going to happen more and more through Zero.
Thanks, Yago.
All right, Scarcity Miner, go ahead, buddy.
Yes, thank you for your time. I was just wondering, so like how we can interact with the Sovryn platform and how, we can easily deposit Bitcoin and it turns into smart Bitcoin, RBTC. Will there come a time in the near future where we could easily transfer that RBTC back to on-chain Bitcoin, like either through the R wallet or using the Sovryn platform?
Yeah, so one of the reasons that the system is still considered to be an alpha is because that's still quite a headache. It's complicated and annoying to do right now. But a system to allow for fast peg out as well as fast peg in has already been developed and has been audited. And so it's getting quite near to deployment. And I think that it's likely that it'll be deployed before the year is out.
Okay, awesome. Well, I'm loving the platform so far, so thank you for answering that for me.
Right. I think when that happens, probably that will be a point where we can choose to declare that Sovryn is out of alpha.
Okay.
That'll be like a big event for us. We should have a party.
Yeah, we should. A big DeFi Bitcoin party. All right, great. Thank you. Yeah. And again, I love Sovryn, so thank you.
Well, thanks very much, and I love seeing you. I've seen you in a number of rooms. It's cool. Thanks.
Yeah, again, thank you very much for everyone here who's participating, asking questions, listening. We're very glad to have you with us, supporting the Sovryn project. Now we're going to have Moonkeen next up.
Hello, guys. You hear me all right?
Yep.
How you doing, Moonkeen?
Yeah, I'm good. Nice to see you guys again. So happy to hear about the peg out feature. Just to be clear there, you're implementing the peg out feature from Sovryn. It's not like it's being facilitated by the RSK team, and then at some point it's going to be integrated in Sovryn, or it's actually being developed within Sovryn so that feature will be available for us as soon as possible. Is that correct?
Right. So like Fast BTC, it was developed entirely by Sovryn Core. Mm-hmm. And so Fast BTC bidirectional FastBTC has also been developed entirely by Sovryn Core. And although there is ongoing work between Sovryn Core and the RSK team around various improvements to the PEG, but yeah, this is pure, has been developed by Sovryn Core, and one of the cool things that we're seeing is more and more protocols like Tropicus and Money on Chain on the Rootstock network have integrated directly with FastBTC as well.
Yeah, that's cool. That's cool. Happy to hear. So I have a few questions. Maybe I'm just going to spray and pray them, and you can sort of answer as best as you can. But I have a question on if you could talk a little bit on the short summary interplay between Mynt and Fish, and then I'd also like to know who's deploying Zero, and since it's a fork of Liquidity, or are they cooperating or talking to the Liquidity team, and what are the long-term plans for Zero USD on RSK and eventually perhaps on other chains? Any thoughts on adding Liquidity USD to Sovryn? And finally, thoughts on Blockstream and the Liquid network. Sorry if that's
that is a lot of. Yeah. We should have a Spaces just with you, Moon.
Yeah, next time.
So I'll try and answer as many of those as I can remember.
Yeah.
So okay. So
the next one's the next call.
Zero team have been talking to the Liquidity team, and I believe they are planning to airdrop some Zero tokens to Liquidity holders. Their interplay between Mynt and Babelfish, or the XUSD aggregator. So the XUSD aggregator and Babelfish are working to create an insured pool of a whole set of different stablecoins. Mynt has a much more narrow focus. It is and plans to always be purely Bitcoin backed. And so the idea is that you, as the user, should understand the difference between these two and recognize the different risk profile and collateral profile of both of these systems. And Babelfish with XUSD has already helped substantially reduce the potential for systemic risk from one stablecoin like Tether or USDC in the Sovryn system. But I'm hoping that we'll see more and more users, and I'd encourage all of you, to take some Bitcoin, convert it into the Mynt stablecoin, whose name I think we've kind of already revealed. But I've been told not to talk about it, but, into the new stablecoin and pair that against Bitcoin in a liquidity pool and start using that with the goal that we can get the pool of liquidity for the Bitcoin-backed stablecoin to be at least as deep as the XUSD stablecoin, because that will help make, Sovryn a truly unique platform focused on Bitcoin, but also to be uniquely resilient because it will have, at its core, a decentralized Bitcoin-backed stablecoin. So I think there's something that we as community members can do just as, pioneers in the space to help deepen that liquidity, make it available, and encourage traders to come and trade against that and really give birth to that ecosystem. With regards to... I think the last piece of your question was, so do we expect to have liquidity in Sovryn? So they have a token called LUSD. I think LUSD might be added at some point to the Babelfish basket, but that would be very much up to the Babelfish community. And certainly, they're a very open community, so you can propose it to them. I think what we would like to see is the new Bitcoin-backed stablecoin begin to be used across multiple different chains. And so, we've got a number of bridges that have been developed, more bridges will be deployed. And I think this, we should also be encouraging the use of this as, a significant stablecoin across the DeFi ecosystem and across all chains. Mm-hmm. And then finally, with regards to Blockstream, so Blockstream had a very cool announcement today, I think it was today, or maybe it was yesterday, about issuing a bond with El Salvador. I think that's really cool. I think we'd like to, and we're Sovryn is doing some things, and there's a team working with El Salvador in around integrating Sovryn, and I suspect we'll start to see more announcements around that over time. Beyond that, Sovryn is a very different project from Liquid, the Liquid sidechain, and I think Sovryn and the rootstock sidechain have very significant advantages. They are more permissionless, Bitcoin backed, so they're backed and secured by Bitcoin proof of work. They pay transaction fees directly to Bitcoin miners. There's a trust minimized peg. These are all, and it's Turing complete. These are all very, very significant advantages. And so, one of the reasons I became excited about Sovryn, and one of the reasons that I think Sovryn is likely and has already been growing faster than these other protocols, is because it has this set of advantages. And despite the fact that it's, the youngest and sort of at the moment the least funded of these different efforts, it's growing very, very robustly and quicker and has more actual activity. So I think Sovryn is currently the dark horse and is underestimated, but I think that is rapidly changing.
Wow, you actually managed to remember every single question. I'm impressed. Okay, yeah, thank you ever so much for your time. I will sit back and enjoy the rest of the show.
Sure thing, Moonkin.
Thanks, Moonkin.
Yeah, hi, Yago. Hi, Sovryn.
Cool. Sorry to stop you, but you have kind of a line here. I think People was next. People Laporto.
Yes. Hi, everybody. Good evening. Can you hear me well?
We can.
Yes. Okay. So, quick question. If you borrow on the Zero protocol, and initially, for example, you put in 150% LTV, and the value of Bitcoin increases so much that you end up sitting on 300% LTV, can you uncollateralize 150% of that LTV?
Yes.
Okay, nice and simple answer then. All right. So basically, if you end up over collateralized, you can free some of the Bitcoin that's kept in collateral for other uses.
Yes, that's exactly right.
Very good. It would be all in the GUI.
And that's what I mean when I say you can either just see your line of credit expand and increase over time, or you can, choose to even close out your position as Bitcoin rises. You could close out the position, end up having only a small fraction of that Bitcoin used to pay off the loan, and the rest of your Bitcoin's free.
Perfect. Thank you very much.
Sure.
Okay.
All right. Thanks, people. Bitcoin King. Go ahead. Gopal, you go next after him.
Hey, I just wanted to say this is an amazing idea, platform that you have set up here. I can't believe this is actually happening with a 0% interest on your own Bitcoin. I think it's genius. My only question is there a top-up program if Bitcoin does go down in a correction? Will you be able to top up more Bitcoin so you don't get liquidated?
Yes, so that's currently manual, but you can definitely, in fact, the whole system is reliant on the idea that users should be able to do that. So that's definitely possible. One thing which the Zero team have discussed working on is helping to automate that system. And that's a more complicated thing. And if they manage to do that, which I think they will, it also opens up a really interesting new product for Zero, which is that you can earn yield, dollar-denominated yield on your Bitcoin. The way that would work is you would basically put Bitcoin in, and the system would generate dollars and start lending them out. And then as the value of Bitcoin rose, it would automatically mint more Bitcoin, more dollars, and start lending those out.
Wow.
So you'd be earning interest.
Oh my God.
it can even go a step further than that, and it can use the interest that it earns over that to just buy more Bitcoin. And so you could basically go and use this as a way to just sort of passively stack.
You would have like an infinity loan that could constantly keep printing you more. And wow, that's amazing. I don't think people really understand how huge this is. This is awesome. Thank you very much.
Sure.
Okay, Gopal, that's your time, buddy. Go ahead.
Hey, hi Yago, hi Sovryn. How are you guys?
Very good, thank you very much. How are you?
Yeah, hi. Yeah, Waylin. I'm seeing you too. Good to see you over here. Yep. I have some quick question, but I would like to start with the first. That what is the core need of building a DeFi on a Bitcoin? Like I would like to understand it from a depth. So.
Sure. I think there's so. I think what attracts people to Bitcoin is it's something that you can truly own. It's something that you don't need a middleman in order to interact with. It's something which is decentralized and secure. The problem with Bitcoin is that all of those things are true, but if you actually want to use your Bitcoin or put your Bitcoin to use, if you want to trade with it, if you want to earn yield on it, if you want to use it for a bet or for a futures market or, hedge against it, anything you want to do with your Bitcoin, even something as simple as payments, right, or creating a Bitcoin-backed stablecoin, requires that today, if you're not using Sovryn, you're using some kind of centralized intermediary. And then basically the magical properties of Bitcoin are gone. And then you kind of wonder, like, well, actually, did all of this make sense, right? But with Sovryn, Bitcoin gets more superpowers. Right? With Bitcoin DeFi, Bitcoin gets the superpower of you able to not only have your Bitcoin, but to use your Bitcoin without middlemen and with your control. And that's the power of DeFi for Bitcoin. It's the power of smart contracts for Bitcoin, and it's the mission of Sovryn.
Cool. So I guess it's available with Taproot, right? But this particular protocol is on proof of transfer, Yago?
No. So proof of transfer is a method that is used by the Stacks chain.
Yeah.
And what Stacks does is Stacks has a separate cryptocurrency called STX, and you stake STX, and then people can validators can prove that they have moved Bitcoin to show that they have sort of anchored the Stacks chain to Bitcoin, and then they move that Bitcoin to wallets that are associated with STX stakers. Okay, so that's a very different model from what Sovryn does, and what Sovryn does with Rootstock, which is that with Rootstock, what is happening is that the Bitcoin miners are mining the sidechain. They're directly mining the sidechain, and the fees are actually paid in Bitcoin rather than some other token to the Bitcoin miners. So the Bitcoin miners earn more Bitcoin for performing this additional mining work. So it's a very, very different model. I think both of these models have their merits. I personally prefer the merged mine model because I think it's more pure, more secure, and more Bitcoin native. I hope I answered your question.
Yeah, the one last question is, as you said that if you want to transact or if you want to do any communication with or through our Bitcoin, then only we will need a DeFi on it, right? Unless then we will not ever need it. So is there any real use case for users right now? Is there any huge volume where users should focus or get on a DeFi, or there is still a time, or we will see a market after 4 or 5 years for that?
So I think there's a huge market for it, and I think the proof of that is that Sovryn's really only been live for a few months. It started being live in April. We've seen over $1 billion in trades, not even including loans, that have occurred on the Sovryn platform. There's more than $165 million actively managed in the Sovryn platform by users. So there seems to be strong interest and strong demand, but I think we're really, really at the very, very beginning. What I think can happen here is that this becomes the primary way that people use Bitcoin, because why not? Why would you want to go through a centralized intermediary? And I think it also changes the way people think about the crypto space in general, because instead of having to launch a new chain for every type of functionality that you have, you can introduce that functionality through a Bitcoin sidechain, or even a zero-knowledge rollup to Sovryn. So we might see a migration of a lot of the things that are being developed today and in the future back to the Bitcoin system, because Bitcoin has the deepest liquidity, the largest user base, and is the most secure system.
Yago. Thank you. I got on that point. Thank you very much. You have pretty much answered everything. The one last thing is all the best to you guys. You are developing something cool with the Sovryn. May you provide a security around the transactions. But as I said, it will take 5 years to get a real use case behind it. To trade it right now for the for a shitcoins, or to trade or use a Bitcoin for any other stuff is pretty much. Is there any other product rather than a Sovryn which has already built on the root type path, and with the root they have proven the AML or the TVL with it?
Yeah. So first of all, Zero and Mynt are sub-protocols of Sovryn. Beyond that, you've got Money on Chain, you've got Tropicus, you've got several NFT projects, you've got some gaming projects. But I think really Rootstock was a technology which needed some additional refinement. And what's really been cool about what the Sovryn core team have done is they've introduced those refinements and improvements to Rootstock. Built out a lot of infrastructure which have made it useful, and now we're starting to see a migration of talent, devs and projects to the protocol.
Okay, Yago. Thank you. Can I have any technical document on a Zero or Mynt? Can you share it? Or is it in website?
I don't know how to. I've been trying to figure out how to share on Spaces. I don't know how to do it.
Just go to any tweet or press a share button. You will find the space above it.
Where do I do that? Sorry.
When you will go to any tweet, or just press share button.
So I need to go to the tweet.
Yep.
All right. I still don't get it. Oh, okay. I see. So I navigate to. All right. Cool. Yeah. I don't know if I have a tweet that is sort of applicable right now, but if you go to the Sovryn wiki, you can start finding that information.
Yeah, cool. Thank you.
Okay, guys, I see we have a few people asking to come back to the stage. I just want everyone to be able to ask their questions first, and then if we still have time and Yago can still be here with us, then I'll get you on the stage again. So don't go anywhere. Okay, next up we have Cripasm.
Hi guys, am I audible?
Yes.
Yeah, hi. It's Script Sam, by the way.
Okay.
Yeah. So I have a quick couple of questions. So the first question is, through this Zero protocol and Mynt protocol, the people will be able to borrow money by collateralizing their Bitcoin. So right now we are having this current lending pools of RBTC and other XUSD and RUSDT. So whether they will be kept or they will be done away with once the Zero protocol will get implemented.
Yeah, sure. So I actually answered this question previously a little bit earlier. Those lending pools will remain. And I think will continue to be useful, mostly for other forms of collateral, but also because people are familiar with them and they're slightly different. So people will very possibly continue to want to use them.
Okay, okay. So, like someone wants to like hodl BTC for 2-3 years, and so like while hodling, they want to earn some kind of percentage of APY. Like currently, the lending pool is offering around 2.77, 2.78% APY. So it will be still possible to deposit the BTC in lending contract and continue to hodl BTC.
Yes, of course, because that's a totally different thing, right? That's borrowing Bitcoin instead of borrowing dollars.
Correct.
Yeah, so definitely.
Correct. So, like, what I understand is Bitcoin, the blockchain of Bitcoin and RS key is very secure. But what I understand is by giving access, so like by lending your Bitcoin on sovereign debt, you are basically interacting with a smart contract. So, if there is some kind of vulnerability in smart contract, so there might be a possibility of liquidity, like liquidity has been drawn out, or like DeFi attacks, which have become a recent thing on Ethereum chain. So, is it possible this kind of security bugs or risks that we will have if we deposit our BTC into the lending pool?
Yes, it is possible. That said, the likelihood, I think, is low. We say this because one of the things that Sovryn tries to do is learn from the entire ecosystem. And so, for example, the zero system is uses a lot of the is basically based off of a different system which already has existed for a while on the Ethereum network called Liquidity. Liquidity has behaved very much as planned. We've also, the Zero team have done additional work to improve the system and have asked and had the system audited by a bunch of different third parties, including devs from Sovryn Core. So I think, again, there is no guarantee ever of 100%, but to the extent that it's possible to try and ensure and make sure that these systems are going to be secure and will behave as expected, I think that work has been done.
Okay. Thanks, Yago.
Sure. Thank you.
Yeah.
Thank you, Cripsam. Next up, we have Wikisha.
Hi, can you hear me?
Yes.
Yes.
Okay. First of all, I congratulate Sovryn team and Yago for being a part of such a great project. I have a couple of questions. Maybe you have answered it before, but I didn't able to get that. My first question is basically when you are lending the zero stable coin instead of BTC, and you are keeping the BTC, and if there is a mass lending of the people, like the people are taking too much stable coins and keeping their BTC, and at the same time the BTC price gets very low. In the recent past weeks or months, you have already seen how volatile is the market regarding the BTC. So in that case, what will happen? The whole thing will crash or comes down, or people will be in loss? I didn't get this point. I'm still thinking about it. Can you please clear this point?
Sure. So the system maintains a minimum of 150% collateralization, but in practice will probably have much higher average collateralization. So let's say it will have 200% collateralization. That would mean that even if Bitcoin dropped 50% in an instant, the system would still have enough collateral to cover all of the issued loans. But usually, right, and by usually I mean every single, or always up until now, including when Bitcoin has been most volatile, it hasn't instantly crashed 50%. Rather, what happens is the price starts to drop. So, for example, in March, April, we saw a price rise, and then we saw the price drop, from 60-something thousand to 32,000. So that was a 50% drop. But it took time. And so what would happen is that people's positions, their Bitcoin collateral, its value would go down in comparison to the dollar. And so they would start to add more Bitcoin or start to reduce their exposure by closing out their loans because nobody wants to lose their Bitcoin. And so in practice, the system would be able to adjust more gradually. But the way the system's been designed is even if it couldn't adjust gradually, it would still be safe. And certainly with a gradual adjustment, it should remain very, very safe.
But if mass majority of the people take a stable coin and doesn't come back,
yeah, so then they would lose their Bitcoin.
They will lose their Bitcoin, but they will take the money 100% of the Bitcoin when the Bitcoin was on 60 and now the Bitcoin is on 30. They are in the profit.
No. So think about it this way. What you care about, right, is only two things. One, if you're a lender, you care about keeping your Bitcoin, and if you're the holder of these dollars, these stable coins, all you care about is maintaining the value of a dollar. So let's talk about you as holding a dollar, right? What you care about is that you can come to the protocol at any time and say, look, I have a dollar, give me a dollar worth of Bitcoin. And that will always be true under the scenario that I described, right? On the other hand, if the lender allows the value of the Bitcoin that is collateralizing them to become too low, then people will come and say, give me, a dollar worth of Bitcoin. And that Bitcoin that the people who do that receive will be the lender's Bitcoin. And so they will be out of Bitcoin. And in fact, they would be, losing a little bit of money.
Yeah, ultimately, if there is a future a way ahead as we are currently in now. So as far as I understand that the future is crypto, so obviously everything will go in positive direction and will go up, hopefully. And your project is definitely one of them. And my last question is basically regarding the Zero. So I'm going to invest heavily in Zero tomorrow or day after tomorrow on Tuesday. Maybe you are starting pre-sale, right?
Well, I heard that the sale may be delayed. I'm not entirely sure till when, but I think the Zero team asked to postpone it a little bit, maybe by a week. But please go on.
Yeah, doesn't matter if it's a week or two. I will invest. And what will be the benefit for me to heavily invest in it? And at the time of need, that as an investor, I also want to take out some of my investment and use in the real world. So what is the minimum time duration that you think that the investors of Mint and Zero can basically help out?
Let me answer the question that I heard you ask. So I think Zero has the potential to be an extremely profitable protocol. One thing that you can look at is the how profitable Liquidity has been. And the way that Zero makes money is through origination fees and through liquidation fees. And both of those can be profitable. But the liquidation fees in particular can be very, very profitable. So where does that profit go? That profit goes to the stakers of Zero token. And so if you want to make money, if you want to make Bitcoin, you stake Zero token and you'll be earning Bitcoin. So that's one way that you can sort of see the real.
Yeah, I can't hear you.
Sorry, I couldn't hear the last sentences you have said, but I did understand the whole scenario. And thank you very much for the answers in detail. Thank you very much. Really appreciate it.
Okay, I think Yago is having a bit of a mic problem. Maybe a connection. We'll wait a bit for him to get this all set up. In the meanwhile, guys, still haven't subscribed to our YouTube, Twitter, Telegram, Discord, we're pretty much everywhere. We want you to help us spread the Sovryn word. So go ahead, subscribe, send it to your friends, let them know about upcoming pre-sale. Like Yago just mentioned, the Zero team has asked for a postponement of the sale. We will have the final date announced, hopefully tomorrow, maybe the day after. But we're aiming to spread this as soon as possible, of course. Let's see what's going on with Yago.
Okay.
Hi guys. Good day.
Hi, Pitja. Yeah, just a second. Let me get Yago back here.
Okay. Can you hear me?
Yes, but PCJ, we have this line here. We have team now. Afterwards, it's Israel, then you go. Okay?
Okay.
All right, so Tim, go ahead. Yago?
Yeah. I don't know if you guys managed to hear the answer I gave to the previous question.
Just the last two sentences slipped out, so maybe...
Ah, okay. Because those last two sentences, they were gold.
Okay, so go ahead, give us this gold, and then Tim, you can...
No, there was only, I don't even... It was a one-time opportunity. I'll never manage to do it again. All right. Cool. Let's move on.
Okay.
Thanks for the information, guys. My question is, I live in the UK, and I'm just wondering how applicable a zero loan is for me. I don't know whether you know or not, but the UK tax authorities state that crypto loans taken out against crypto are subject to capital gains tax at the time of taking them out. And I'm just wondering, has this been taken into account? And how would this happen if I take a loan out with zero? How is this taken into account?
So Sovryn Protocol is completely, agnostic to the regulations in various jurisdictions, and so this hasn't been taken into account by Zero.
It's not a private transaction either, so it needs to be accounted for by me.
Right, exactly. So the person that needs to take this into account is you, and you need to decide how you want to manage that. So I'm actually unfamiliar with that piece of regulatory. I don't know when it was introduced.
Well, the only way I know about it is that I know that in the Celsius company, when people are taking a loan out with Celsius, in effect, what the UK tax authorities have said they must do is that they buy the Bitcoin off the user at the time of taking the loan out, and at the end of the loan, they sell the Bitcoin back to the user at the same price. And so the capital gains tax is at the point of the tax transaction is at the point of launching the loan.
I see. Well, this probably wouldn't be applicable to Zero, although, of course, this is not legal advice. You'd need to talk to your own accountant. But the reason it isn't applicable to Zero is because you're not actually selling your Bitcoin. You're bonding it in a smart contract, but it remains yours, and you're the only person who can. There's no custodian. So I don't actually think this would fall under that regulation, but of course, this is something that you need to check.
I can just add to that is that, of course, Celsius don't want to get involved in buying and selling Bitcoin or anything, but in order to do the transaction with UK people, they had to follow. It was insisted upon by the UK tax authorities that they put something in place that, in effect, said they'd entered a contract to buy Bitcoin and to sell it back to you at the same price. So the UK tax authorities impose that in order to do business. And I'm just wondering whether that's going to be the same case with Zero.
The US tax authorities have no...
UK.
The UK tax authority, the FCA, has no jurisdiction over Sovryn. Sovryn is a sovereign jurisdiction. They can put forward a SIP requesting a change, but the community would need to accept that.
Okay, thank you very much. Thanks, Yago.
Sure.
All right. Next up, we have Israel Obinian.
Hey, thanks, guys. Thanks, Yago, for all the information you provided so far. I think you may have touched on this, but just a question about yield. There's a protocol, I'm not sure if you're familiar with it, called Alchemix, which effectively provides a self-repaying loan. But they hand over effectively the collateral to Curve and to Yearn Finance to generate the yield. Do you have any plan within the context of Sovryn to add yield to the collateral, the underlying collateral, so that it will self-pay the loan rather than wait for an appreciation in the price of Bitcoin?
So at this point in time, I don't think that that is the plan. The reason being that if you do that, you are introducing an additional risk vector. Now, Sovryn actually has fairly decent interest that can be earned in Bitcoin. And it's possible that at some later stage, it would be possible to have zero, take the collateral and start lending it out. But that would imply a risk. And I think it's a very significant risk, at least conceptually. And we should be clear on what that risk would be. When you are borrowing, when you're lending out your Bitcoin, you're lending it out in such a way that it is collateralized, right? So the borrower is over-collateralized, but they're over-collateralized with other assets. And so in a worst-case scenario, if the lender is unable to pay back, they have their assets collateralized, and you end up with the same value, but in a totally different set of assets. It could be stable coins, it could be ETH, it could be whatever. If Zero wants to be able to say it is always fully backed by Bitcoin, by lending the Bitcoin out, there is this scenario in which it actually ends up being collateralized by some other asset, at least momentarily. And so a decision needs to be made by the Zero community, and this is a discussion which they can have. The Zero token holders and SOV token holders can discuss whether or not that's a risk that is worth introducing. My personal view is, at least now, when we're introducing this Bitcoin-backed stablecoin, it is a unique asset in the entire crypto space. It is, it's a pure play stablecoin which is decentralized and collateralized by this pristine asset, a very, very clear sort of, Bitcoin-backed thing. And I don't know if it would make sense for the additional small yield of, 2 or 3% that it's possible to earn, to change that. One thing that I did mention earlier, however, is that you could have a system where you actually could do something with Alchemix, where you put your Bitcoin in, and that Bitcoin gets converted into stable coins, which are then lent out, and then earn a yield. And then that could pay itself off. Personally, I think Alchemix is a little bit of there's quite a lot of, it's a bit of a game. There's a lot of engineering, financial engineering going into that. And so I think a lot of the users are not aware of all of the risks that are involved in Alchemix, which is that their collateral could get stuck basically forever. If the yield on Curve or the yield on Yearn goes down, which it is, it's currently going down, it could be that your loan never pays itself off. And then...
No, I totally agree with you. I'm not advocating that the same system is used, more the concept of self-repayment.
Right.
That's the only element really that is probably the question I'm putting forward. So, but no, I think based upon what you said originally around utilizing potentially the stable coin as a way to generate interest, which in turn you could then either buy more Bitcoin to reduce your collateral exposure or to pay off your loan, then I think, in the future, if that's something that comes online, then that would be really useful, I think.
I agree, and so did the guys working on Zero, and I know that they're working on this, at least conceptually, at this point.
Okay, thank you very much.
Sure, thanks. Who's next?
Hey, Yago. So I was wondering if there would ever be like non-mark-to-market loans. So just pay it back within like a time frame versus, if it dips to a certain point, then you're kind of like instantly liquidated.
That's definitely possible, but it would imply a totally different system. So what you can do is you can create like time-based loans, but people need to be aware. Even small changes to the way financial systems are built can really change the types of risks and the types of yields and the types of things that are possible. And so it's important, that people, as much as possible, understand the differences between things. So one of the interesting things about the way that Sovryn's current lending system works is it's basically fixed rates on 28-day rolling windows. Another aspect of it is that there are multiple different oracles that need to concur that the prices dropped below a certain point, which would allow for margin calls. Now, it's possible to build out a system which would have, different windows, like 60-day windows, and which would say that so long as you're servicing your loan, you don't get liquidated within that 60-day window. I'm hoping that over time, more developers and more people who are working in the Sovryn ecosystem start building these out, because even though they have subtle differences, they are useful to different people for different use cases. But I don't think that's going to be something that's appropriate for Zero.
Okay, Rock Verb. I hope it covers your question. Trading virus, crypto hijack. Are you here? If not, thank you, world. Okay, crypto hijack, go ahead.
Yeah, I'm here. Hi, Yago. I just noticed the newly pinned tweet, so my question is actually a bit redundant. But first, let me congratulate you and the whole team for the tremendous work done with Sovryn. As an IT professional, I am more than impressed by the execution and the pace behind the project. So I was wondering, what was your opinion, matter of fact, in regard to the likelihood or even the technical feasibility of a country adopting Mynt to empower the currency and actually implementing the Bitcoin standard, matter of fact, which now I see was tweeted. So I was actually thinking, reverting my question to, what do you think will be the challenges for that to happen? The difficulties?
Well, I can tell you that the Zero team, they're pseudonymous, but at least part of the team are from Latin America, and I know they're excited about being able to harmonize between the two legal tenders of El Salvador, the dollar and Bitcoin, and basically create a unified dollar-Bitcoin legal tender.
Yago, you need to unmute, I guess.
Sorry, I didn't realize I was on mute. So the Zero team is pseudonymous, but some of the people on the Zero team are from Latin America, as I understand it. And part of their inspiration for doing this is that they wanted to harmonize between the two legal tenders of El Salvador, the dollar and Bitcoin, and basically create a Bitcoin dollar. And the steps towards making that happen, well, first is, launching Mynt and launching Zero. But second, integrating it into things like the Chivo wallet, retail payments, allowing people to start making and borrowing loans. Building the technology is one piece, and then the next piece is distributing it and making it easy for people to use it by integrating it into things that they're already using. And so those will be the coming steps.
That's pretty amazing. To my understanding, tell me if I got it right. I personally see Zero like the end game for the Bitcoin holder, and Mint as the end game for countries or sovereign organizations have proclaimed, even some proclaimed organization that might want to act as a country. I remember your space about the possibility analyzing all the legal aspects or creating basically a digital country, a borderless country. I see Mint as an incredible piece in this project.
Yeah, I totally agree. And that's sort of like where I started this spaces, was saying I think this is game over, ultimately. Right? Because now we have totally sovereign financial system, which is able to not only have sovereign reserve currency, but sovereign exchange currencies. The kind of currencies that people use for day-to-day payments and activities. And that means that once you're on-ramped into the system, you never need to off-ramp. And it means that once you hold Bitcoin, you never need to sell Bitcoin. You can always just lend against your Bitcoin. And it becomes, as a result, a truly powerful asset. I think this is really huge. I'm extremely excited about it. And I think, I'm hoping we together as a community let everyone know that this is happening, why this is valuable, why this is important, and get everyone involved.
Perfect. Thank you.
Thanks, Crypto Hijack. Okay, Trading Virus, you went off. Now you're here. Go ahead, buddy. Ask your question. Trading Virus, unmute yourself.
Yeah, can you hear me now? So first of all, congratulations on both the new tokens, Mynt and Zero. I just have a question to Yago that out of these two, which one do you like the most?
You don't ask someone to choose between their children, right? Or if they're in a polygamous relationship, you don't ask them which is their favorite wife. I love them all equally. I know, but they work very well together, right? They're complementary. I like the fact that Mint gives us the ability to use Bitcoin with a stable coin, which is truly decentralized, and means that we can now use Bitcoin for everyday payments. And I like the fact that Zero means that we never have to sell any Bitcoin ever again. So between those two things, they're awesome. It's like dating twins. It's kind of like every man's dream.
Your answer actually resonated me because before asking this question, I thought that it is something that I'm asking a father that out of their children, which one he likes the most. So that is already resonated.
And then I took it to a much more dirty place. Yeah.
Thank you.
Okay.
All right. Thank you, Trading Virus. Wizzy Lizzy, go ahead.
Lovely. Hello. Thank you. So I wonder if you guys are looking at what Abracadabra is doing with providing liquidity pool positions in order to mint stables. I understand this is a very experimental thing and it won't be implemented anytime soon. But as a LP provider, it's an interesting concept and I would like to hear your ideas on the subject.
I
What are your thoughts?
Looking into it, but I don't know that if I have intelligent thoughts, to be honest. I am not entirely sure that I fully understand the additional risks that this might be introducing. I think it very much depends on the pairs that are being added. But it's an interesting idea in terms of generating yield for stablecoins. I think that Babelfish have a different version of something like this that they're working on, where they would be able to, and I think, they've been talking about this from the beginning, that Babelfish can generate yield by lending out the underlying stable coins in the basket. And I know that they're also working on figuring out how they can earn yield, because they're a cross-chain system, on more than one chain using the same basket of assets. So I think there's some very interesting stuff that Babelfish are doing in the background around that. So maybe they have, thought more deeply about this than I have. But I'm very interested in Abracadabra. So if anyone wants to, spend some time talking to me about it and explain to me in more detail, I haven't used the system. I've only just read about it, so I'd love to learn more.
All right, thank you very much, Wiz and Lizzie. Next up, we have some previous speakers who have some follow-up questions. So, Techie World, you waited so long. Go ahead, buddy.
Hey, so I was thinking about the same thing of lending. You can use that. One question is that does Zero creates a contract on your address, or there is a common pool where all the BTC is deposited?
There's a common pool, but it's actually not a common pool. It creates a new smart contract vault for every user.
Okay, so what I was thinking that we could use a common pool and directly link it with Sovryn's margin trading system and provide extremely low interest rate.
Yes, it is possible to do that.
Because you told this in one of the, Discord's call, this process.
I think that is a possibility. I don't think it would actually be that complicated to do. So I think it might be something that we see happen, and that could provide very, very attractive margin rates for users who come in with Bitcoin collateral.
And they can earn interest. You told this whole process in one community call, I guess.
Yeah.
After community call, you told.
Yeah. So I do think that this is something that the Zero team are moving towards.
And you told that you're working on El Salvador legal tender. What is the time frame we can expect?
Well, it's already legal tender, right? The dollar is already legal tender. Bitcoin is already legal tender. I think it's more a question of integrating with the different systems. I don't know what the time frame around that is. Those are for me. Yeah, those are
some estimate 1 month, 2 months, 1 year.
I don't like to commit to timelines when I don't know with great detail what they look like.
Okay, and one more final question. I don't understand, is Zero is a fork of Mint, or how it's interacting? Because Mint is using new coins, so how it's again creating ZUSD?
What happens is that Mint uses, it aggregates different sort of sub-stable coins, right? So it aggregates different Bitcoin stable coins or different methods of creating Bitcoin stable coins. So for example, the Zero system, when you're creating a loan, what it does is it sends a token called ZUSD to the Mint protocol, and then the Mint protocol mints a new token on the basis of that.
Okay, so Zero creates the ZUSD, and that ZUSD is sent to Mint protocol. After that?
Correct, yes.
After that new coin is created, that new coin is used by the user, right?
Yeah, so the user receives new coin. They put in Bitcoin, they get new coin. and then they can take the new and trade it and buy with it or do whatever they want with it.
So which coin would be majorly used? Is it ZUSD or new? I think
it would be new. Yeah. So most users shouldn't have to touch ZUSD.
Thanks for clarifying.
Sure.
All right, next up we have Moonkin. Go ahead.
Yo, guys. Thank you for letting me come back on. Shout out to my man Wizzy Lizzy for mentioning Abracadabra. Wizzy Lizzy was the guy who got me first hooked on Sovryn, actually. So yeah, nice to see you. I know you're down in Bitcoin Beach enjoying life. Anyway, I wanted to ask, Abracadabra is interesting, but have you guys, I mean, surely a lot of you have heard of like the Olympus DAO concept and the forks of Olympus DAO. I don't know much about them other than people seem to be, I mean, people are pretty impressed. Either they're geniuses or pure, DeFi degenerates. Like they hacked the entire, I don't know, capital financial system. Like they seem to be found some kind of perpetual positive feedback loop. I don't know. Like, has anybody else heard about it? Or have you guys heard about it?
A bit of both, right? So they've come up with some with a very cool way of getting people to buy into their system. I think we could launch something similar. And I've heard some people like David Soroy, for example, has been talking about doing something similar on Sovryn. I think people should be aware of the risk, right? When you're buying an OHM token, right, an Olympus token, you're paying a very, very, very high premium, about 80% above the actual sort of value of the underlying assets. Mm-hmm. These kinds of things over time tend towards their sort of underlying asset value, but that can take a very long time. That can take years. So right now it's possible to still make quite a lot of money. But these are games, right? And people should be aware of the fact that when you're participating in a game like this, it's not creating, it's not a product that's generating revenue. It's a zero-sum game in a way that you're playing with other people.
Yeah, thank you. Just wanted to hear what you guys might have thought about it. So again, with the liquidity questions and zero, of course. So will there be is it a 1-to-1 of liquidity, or will there be additional features like, I don't know, like the rates, for instance? Are those equal? I think right now it's like 20-something% on your liquidity USD into the stability pool. And liquid token staking, I think that's about 14%.
I don't think it will be identical. No, the tokenomics are different. The goals of the system are different. The upgradability of the system is different, but the underlying lending and minting mechanism is very similar.
Mm-hmm. Can you share some other details on what differs from?
Well, I think first of all, it's an SOV bonded token, so it won't just be able to squirt out tokens, at a very, very, very high rate. So that will be one difference. Another difference is that it's an upgradable system, which is protected by both the zero stakers and the SOV stakers. A third difference is that I know that they're looking to introduce new features like the ability to earn yield on your Bitcoin. Potentially the ability to also take out loans against SOV. So I think, these two projects will while they share a lot of code, are evolving to different purposes. Another big difference is that Liquidity, is just one player of many in the Ethereum ecosystem when it comes to stablecoins. Whereas with Zero, I think the idea is to turn it into the primary, or at least with Mint, right? The new token is to turn it into the primary stablecoin used by the Bitcoin ecosystem, and by extension, maybe the world.
Mm-hmm. So will there be staking of the Zero token?
Yes.
Okay.
All right. We're almost 2 hours here.
Oh, wait, one more. So, sorry.
Definitely do spaces.
It's a quick one. So when we have DAOs, decentralized anonymous organizations working on open source code, and we're voting on improvement proposals and stuff like that in order to, allow for somebody to merge the code. Like, what's stopping developers from, merging, code anyway, and like for upgrading the system, even though the turnout of the votes turn out to be unfavorable or something like that. Like, how does the actual code merging and deployment work after a SIP has been completed?
Sure. So to upgrade the smart contracts, you need to have the owners of the smart contract agree, right? So if one person owns a smart contract, they just sign the change. If there's a multi-sig, then, a majority sign the change. But if you have something like Bitocracy, then the actual system that owns the smart contracts is the Bitocracy. And it only introduces changes that are voted, that are approved by the voting. So instead of having a multi-sig system, you have a system of voting. And that actually, the vote itself upgrades the system.
Okay, so what transfers the said protocol from one smart contract to the other?
When a SIP is deployed, not all SIPs are like this, because some of them aren't actually changing contracts. But when a SIP is deployed that changes a contract, you'll see that the devs will point to the new code. And when they actually list the SIP, when the SIP actually gets listed, it's a piece of code that says, if this SIP passes, upgrade the system in this way. So it's the code itself is what's being voted on, and the code itself is voting on the change, right? So, so for example, we could have, for example, instead of having the exchequer, we could have all of the funds held directly by the protocol, and then anytime we wanted to make a transaction, we would actually have to vote on that transaction.
Yeah, because it's a multi-sig transaction.
Yeah. Well, it's not a multi-sig. That's the point, right? It's not a multi-sig. It's more sophisticated than a multi-sig. It's a Bitocracy. It's literally the vote itself is replacing a multi-sig.
Okay. Yeah, I mean, I do some web development in like the Web 2 world, some microservices and stuff like that. So I haven't at all delved into smart contract deployment. More or less used to like the continuous deployment and integration pipelines that most of us use to deploy decentralized infrastructure. So this is like, pretty interesting to me. Wonder if there's some way that where I can learn more about like deployments and upgrades and stuff like that pertaining to the questions that I
think there may be something in the wiki about it, but if not, we should get someone to write something.
Yeah, or just somebody that I could talk to maybe offline in the Discord.
Sure, you can. There's a technical channel in the Discord, so you could post there and ask your questions.
Yeah, sure. Absolutely, yeah. Thank you. I learned a little bit.
Awesome. Judas, maybe we should do just 2 more questions?
Yeah, I think we have 2 last speakers here. We'll go with the real Benji, who hasn't asked one, and then we'll end with people who just waited so long to ask another one, and then we'll wrap it in. Go ahead.
Cool. Hello. So I joined a little late, so if this question was already answered, skip over me. So I'm just kind of trying to understand better how the stablecoin gets minted. Does a lender have to be involved in this process, or does it literally you deposit Bitcoin into this mint, and the mint generates this zero token, and then when you want to, I guess, yeah, is that the process?
No, there's no lender. You are the lender. You're lending Bitcoin into the protocol, and the protocol on the basis of that is minting stablecoins.
Gotcha. And then the 110% like LTV is to kind of maintain liquidity. So if people want to get their coins out, they basically can. There's no like solvency issues.
No, it's there. Well, it's not so that they can get their Bitcoin out, so that people who have the stablecoin can always redeem the stablecoin on a one-to-one basis for, $1 worth of Bitcoin. And
gotcha.
You need to, yeah.
Okay. So no lenders. Gotcha. Okay.
Thanks, Benji. People, go ahead.
Hey, hi again, Eden. Okay, very simple question. What is the zero token that is going to be issued soon used for?
The zero token is used for governance of the zero sub-protocol, and also collects the revenue from the zero system. So basically, by participating in governance, you get paid. And zero can potentially be a very, very profitable protocol, and so there could be quite a lot of value that accrues to zero stakers.
Okay, thank you very much.
Awesome. Well, guys, thanks very much for spending so much time and asking all these questions. I think they were extremely helpful. I think we'll also try and use them to write up, FAQs and things like this around, and make sure that there's all of the information around zero is available. The zero sale is going to happen soon. I think it's going to be, quite a cool event. It's going to be a groundbreaking event. And people who participate in it will be helping to bootstrap the zero system and the entire Bitcoin-backed stablecoin system. But I think, this is a really, really exciting opportunity for us, but it's an important thing because I think it means nobody ever needs to sell Bitcoin ever again. So I hope, there's several hundred people who have joined this call. I hope you guys help spread the word, help build out the initial liquidity, help popularize the new token on the Sovryn platform, and when it gets bridged to other places, and let's redefine what decentralized stablecoins are. Thanks very much, guys. Stay sovereign.
Thank you very much, Yago. Thanks for the time. Thank you, everyone, for joining us. Have a great night, and don't forget to stay sovereign. Bye-bye.